Hello, everyone. Welcome to my second airing for the day, and this is the podcast that I've named On the Record, where we have a little fireside chat content. But I have heard that Richard has lots of concerns when it comes to these futures and what they mean for the price of Bitcoin, and this is our chance to explore those concerns today. So, Richard, go ahead and say hi. You've never been on my YouTube channel before, so tell the people something about yourself.
Hey guys, Richard Heart. I'm Richard Heart Win on Twitter. Someone else had Richard Heart, so I had to slap 3 letters on there. Win sounded cool. I got a YouTube channel too, put up crypto content once in a while. I'm pretty much a Bitcoin maximalist, but I like some altcoins. And I met Tone through the World Crypto Network, so here we are.
Well, since you mentioned it, which altcoins do you like? Not that we're gonna get into that subject, but I'm just really curious, and why, in like a brief sentence or two, why you like those altcoins.
Sure. So there's some things that you wish Bitcoin could do that it can't. And until the software is upgraded or the ecosystem evolves so that you can, if you want to send somebody money truly anonymously, you can't easily do it with Bitcoin. You'd have to use mixers and hope that the coins you got out weren't tied to the coins that you put in. And, you'd have to be a rocket scientist to actually anonymously send someone money with Bitcoin. And there's other projects that do that better. So, Monero does it better. Um, there's other ones that might, but, I hate most of the other ones. And then, if you were worried about scaling and block sizes, then things that are built on distributed acyclic graph instead of blockchains are cool. And in my opinion, the best of those projects is Byteball. It sucks that the price is so terrible, but the technology is super cool. It's got smart contracts built in. It's got an exchange built in where you can convert from Byteball to Bitcoin back and forth with an order book through a chat bot. You can write your own chat bots that do smart contracts, and it has anonymity features, and it doesn't use blocks, and it doesn't use mining. And it was fairly distributed with no pre-mine. I think 1% pre-mine actually for a foundation or something. It's just super cool tech and works really well, and the value is like nothing. The price like died. Those are the only two altcoins I can think of that I actually like.
All right, cool. And just out of curiosity, Litecoin's been pumping. What's your opinion on that one?
Litecoin's interesting as a test bed to roll out new things before they hit Bitcoin to see if they work. So for instance, Litecoin was a cool test bed for when we rolled out SegWit. They got SegWit first. And, people felt much better rolling out SegWit on Bitcoin because there was $1 million bounty on Litecoin that if you could hack SegWit, you could have the $1 million. And that inspired a lot of confidence. So I like Litecoin as a test bed. Um, it, that's cool. I mean, I guess I don't have a problem with that coin. Seems like it serves a useful function.
Yeah, no, I agree with you on Litecoin, and of course we both agreed that Ethereum is just a shit show,
It's
and
terrible.
I well, like I've made an argument that OneCoin is not as scammy as Ethereum. I don't know, maybe that's going a little too
It's a
far,
little
but
too far. I mean, the difference is with one coin, you're going to lose money, but with Ethereum, it's like a honeypot that tricks developers into losing money to bugs. Because if you write
oh,
software, you will have bugs, and if you write financial blockchain software that has bugs, you lose the money. So hundreds and hundreds and hundreds of millions of dollars get lost to bugs, and it will always be the case because they don't use formally proven languages. And even if they did, you get failures around the parts that you formally proved because you can't test all the other parts that your system's talking to. So it's just, if you want maximum problems and maximum bugs, use a Turing complete language. If you want minimum problems and minimum bugs, turn the opcodes off like Bitcoin did. Bitcoin was designed to have a storefront in it. They turned it off. They were thinking about, having some poker thing in there, I think. You can look up the history. But there's other features that they were thinking of rolling in there, and they turned them off so that you'd have less bugs. And look, it worked great. Less options to
yeah,
screw up.
yeah, no, and on that same note, like my view is that look, it's only a matter of time before OneCoin is no longer with us, but Ethereum is gonna just grow bigger and bigger and bigger until it's gonna fail. Let's just hope it's not too big to fail to because and take down all of these ICOs with them. So
Yeah.
anyway, all right, let's get to the topic of the day, and that's of course the CME future. Like the CBOE futures launched like a week ago,
Mm-hmm.
and I thought that was like weird that they come out of nowhere. They pre-run the CME futures. To
Mm-hmm.
me, the CBOE are options experts, not futures experts. I
Mm-hmm.
would never trade a CBOE future. And like I expected, they have less leverage, they have less liquidity. And I think that they are going to be almost irrelevant once the CME launches. So let me kick this off by doing a quick screen share here. And maximize my screen a little bit. Hold on a second here. Uh, we're going to talk about the definitions on what these features are, and then you and I will kind of wait. Why can't I not? Anyway, oh, there it is. Okay, let's drop that, and I'm gonna go to full screen. There we go. That's better. And now I can do screen share. Go ahead and do that.
I was chatting with
Application. There we go.
my chat on
Yeah,
my
I got a
live stream
little bit
here.
of noise in the background here. I have no idea what's
I don't
going
mind
on
it.
behind, but anyway. All right, so here's the CME future, and a couple of things to notice here. So each contract is going to have 5 Bitcoin. Okay, so that's one thing to keep in mind. Also, the price ticks are going to be in $5 increments, which I'm perfectly okay with. It just makes it easier to trade. And right now, with the current price of Bitcoin, it's pretty much trading in like at least $5 increments. This also means that the bid-ask spread on the future is most likely going to be about $5. We need some of this liquidity. The crazy part is that the futures stop trading for about an hour, I believe. Right, there's a 60-minute break every day, and they are closed on the weekends. They resume trading Sunday night at 6 p.m. and they Eastern time, and they stop trading Friday at 5 p.m. So Friday at 5 p.m. the future is going to close. Sunday at 6 p.m. the future is going to open. So that's a 2-day window of no trade, which is going to be problematic. Okay, so the $5 increment in price, because there is 5 Bitcoin in each contract, that means that the value in your portfolio is going to move $25 with every tick of the contract, uh, of every contract that you have. Okay, so let's see. They're going to have monthly listed contracts with the nearest 2 months in the March quarterly cycle. So this part has always been a little confusing to me. I mean, once they launch, you'll be able to see all of them. I still haven't had time to log into my Interactive Brokers account. I'll probably log in on Monday, and I'm going to take a look what my options are. Okay. Um, Trading terminates 4 p.m. London time on the last Friday of the contract month. So this is expiration specific. Of course, expiration is cash settled and not physical delivery, which we're going to talk about. And also, there is price limits. So if the price of Bitcoin moves 20% in one day, I guess the contract stops trading and waits to catch up. I mean, that part is a little bit curious to me as well. I would love to see it in action. I'm sure we'll find out over one of the weekends where Bitcoin price moves, but the futures aren't trading.
Well,
So the really
doesn't the
interesting thing
CBOE
here,
already have the same problems due to almost identical specs, but different index and different contract size? So I mean,
I'm trying not to take the CBOE seriously. I'm waiting for the big boys to get in the game, which is the CME.
all right,
Let's see what happens. I wasn't really paying attention to the CBOE,
gotcha.
and clearly the CBOE hasn't done anything to the price, right? I don't know
Well,
how immediate your concerns
they're
were,
they're
but
doing
we're
a
now,
contract a minute, which isn't that bad, and the
but
market.
again,
Go ahead.
the liquidity on those, it's going to be the CME. I mean, it's
Yeah.
I'm waiting for the CME. So the unfortunate thing is that the CBE has this margin button, but when you click on it, this page is like almost useless. Like I still can't find Bitcoin on this list.
Well,
And they're showing.
I do not believe that the screen you're looking at, I mean, your margin's set by your broker, not by the CME. So it's going to be broker specific.
Uh,
So for
yeah, there.
instance, go ahead.
I agree with that. It is broker specific, but generally all of these brokers, they're within margin of error, right?
Not on this one,
I
not on
believe
Bitcoin. I'll give you an example
go
if
ahead,
you're ready for one.
go for it.
So the CEO, founder, $14 billion net worth Hungarian gentleman that lives in West Palm Beach that owns and started Interactive Brokers was so terrified that the price of Bitcoin would go from 7,000 to 70,000 that he wrote and paid to have published in the Wall Street Journal a full-page ad begging that Bitcoin futures be settled through a separate system so that if the price went too high, the shorts, if they couldn't cover, wouldn't bankrupt everything. So
I
on his
agree. I agree.
system,
I'm actually gonna pull that up now. I'll add it to my description.
all right,
I heard the interview. Interactive Brokers. Yeah, I mean, I have an account
his
with them,
name's
right? Because
Tom
unfortunately,
Perify or Pertify.
yeah, CEO Bitcoin CNBC. And yeah, I heard his concerns. His concerns are very valid. But as far as like the margin goes, you're right. It
Well,
is
he
set
changed his
by
mind. He changed his mind. So that's the end of the story. Is that he didn't. His original position that was that Interactive Brokers would allow you to long the contract on
but not
CME,
short.
but not short. And then in a
Yes.
television interview, he said, "Okay, well, we're going to let people short, but you're going to have to put up 5 times the margin." So it's a
Five times?
5 times. So if you
Oh my
want,
God.
yeah, and it's a it's a 5 Bitcoin contract. So you have to put up 25 times the price of a Bitcoin in order to
The
short
price
one
of five,
contract.
no, the price of 5 Bitcoins to short.
Right, but 5x margin on 5 coins. So
Right,
if you
right, right.
so if you
Exactly.
want to short one contract, you've got to put up
Like a
half a
million
million
dollars.
dollars. So I mean, I don't know about you, but if you if you wanted to play the game,
Let's do the math here, right? Let's assume Bitcoin is at 20K, which I
yeah,
think it's going to be before any kind of a pullback at this point. So if we're talking 20K, we're talking 100K for 5 Bitcoin for one contract.
right.
100K in margin.
No, 500K in margin to
Right,
short
500K margin.
one
And what
contract.
people have to, right, and what people have to understand is you got to have at least like double that in your account, right? Because if you only have exactly 500K and you go short and the price of Bitcoin loses $10, the next day your short is going to be liquidated because they're marked to market every day. So they're going
Yeah.
to have to fill the margin back to the original amount the following day. And if you have nothing in your account reserve, then they're going to liquidate your contract.
Yeah, they'd have to because they need to make sure you can pay. So, I mean, the issue is I
Right.
can't think of anything more bullish. It'd be very hard to think of something more bullish than making it 5 times more expensive to short than to long. It's going to automatically
Uh,
bias the market towards a higher price.
Now, to be honest with you, I don't have a problem with that particular margin requirement. I mean, I think it's a little excessive. I honestly think that 100% margin on a short would have been fine. I think it would have been fine.
But the lock, you
Once
can't because the lock limits. The market will stay limit up, limit up, limit up. So you need extra room to run when you can't ever exit your position because the market's permanently locked limit up.
And that's what he's worried about. He's worried
Yeah.
that he won't be able to resell
Yep.
your contract.
You'll never get out.
If let's say, right, if the price of Bitcoin goes up, let's say 30% over the weekend, you got a big problem. The following day, if it continues to go up 20% a day, you are never able to liquidate that contract.
And your liability to the exchange, or in this case, your liability to your broker is all of your assets, unless you're isolated with an LLC or some type of magic. If you short
Right.
Bitcoin and Bitcoin stays lock limit up every day, you will go bankrupt, and there's a chance that whoever your counterparty was, the broker, could also go bankrupt, and there's a chance that the clearinghouse that the broker deals with, that is in between him and the CME, there's a chance they go bankrupt too. So don't short Bitcoin unless you want to risk total destruction and annihilation.
Yeah.
The
I mean,
history of
the
Bitcoin is
only
shorts getting wrecked constantly.
well, the only way to get around that, I mean, well, not forever, right? I mean, these contracts do expire every month. So either way, at the end of the month, it's over, right? I mean, it's not going to be a perpetual loan,
That's
right?
true.
So they do have expirations, right? So one way to mitigate this is to have weekly expirations and not
Yep.
let people go further out. And then the worst case scenario is, it stays locked. The contracts that were active completely close out, and then you got to wait till it stabilizes before anyone can take on another position.
Yep. I mean, if you look at the chart, why would you want to short that? We're going parabolic. The green candles are getting taller and they're coming faster. If you short into a mania, you done screwed up, boy. You're going to lose it all.
Well, I agree. I agree. But the market will turn sooner or later. We will have a bit of a downturn. And,
When?
some people could be using them to hedge, right?
Yeah.
If you have Bitcoin and you can sell forward at a nice, 10% premium,
Yeah, I can explain cash and
why
carry
not?
if you want. One of us needs to explain cash and carry because it's all anyone cares about is how is the cash settled futures going to affect the spot price? I just can't get it. I don't understand. We have to explain that. I can do it
Go
or you
for
can
it.
do it. Okay, I'll do
Go
it.
ahead.
So if Bitcoin futures expiring in 3 months are trading at a 10% premium, you sell that future and you buy Bitcoin spot. You buy the Bitcoin now and you sell the future contract and you make the 10% difference by waiting 3 months until it expires. That's it. You sell the future, which is a higher price, and you buy the Bitcoin, which is a lower price. This pushes down the future contract price and up the spot price. It's called cash and carry, and all you got to do is have an account, buy your spot, and wait, and that's it. Easy, right?
All
Locked in
right.
your profit.
Well, it's not that easy, right? Sorry, I'm muting because of the truck going by. All right, so let's talk about two things with this. So it's very likely that a lot of the shops have already looked to do this because I heard that OTC markets went nuts when it looked like this futures thing was going to become a definite.
Mm-hmm.
And this could be one of the reasons why Bitcoin went up from my expected pullback around 7.5 and then just about 10K. And then we exploded all the way to 16K. So this could be preparations for this type of trading. A lot of the prop shops, a lot of some of the hedge funds are buying up the Bitcoin. They are smart enough not to let this Bitcoin sit at third-party exchanges where the Bitcoin is at risk of theft and hacks. So they are taking possession of that Bitcoin. They have the Bitcoin in collateral so that they are in a position to short Bitcoin in the futures market. And worst case scenario, they will just have the collateral on hand to prevent their hedge fund from going broke in case they are wrong on the short trade. So a lot of the funds probably have already prepared for this if they were going to do it. You agree?
The issue, so the problem with that, everyone wants to dream that this new thing that's going to change everything is coming. And what you find out half the time is that really what's causing the thing is the same thing that's always been causing the thing. So Bitcoin's been going up exponentially, as have the Google searches, as have the wallet downloads, as have the hardware storage devices sales, as have the YouTube videos, as have the altcoins. Like everything's growing exponentially in this space to the point where websites can barely stay up. And everyone thinks they're DDoS attacks, but they're not. Maybe once in a while they are. They're just too many users hitting F5 because they care a lot. The charting websites go down, the exchanges go down, the CBOE retail website went down. because
Yeah.
people really care about this stuff, and there's millions of us now. So that is the reason the price is going up. And as you can see by the CBOE volume, there are Wall Street people filling up their bags now, and they have giant bags to fill, and they will ramp in and they will scale in, and they will blow up this bubble squared, just like they did with real estate, just like they did with education costs. Everything Wall Street looks at, they blow up in a giant bubble in. Well, we've got one bubble. Let's blow it up with another bubble and combine them, make a bubble squared. Let's
I
make
mean,
the biggest bubble the world's ever seen. And,
no,
and we will. That's where we're
we can
headed.
debate that. No, we can debate that. I don't think Wall Street. I mean, look, Wall Street was selling all those derivatives, but it hurt them more than anybody, right? It's not like
They got
Wall
bailed
Street
out.
profited.
They got bailed out.
Wall Street. Yeah. Anyway, that's maybe we'll have a different podcast on that part. And I was at Bear Stearns during the financial crisis. That was actually
Okay, one or two guys didn't get bailed out, but a lot of guys did.
But hey, but no. I actually heard direct reports that OTC went crazy.
Yeah, they wont in. Everybody wants in, including OTC.
No, but retail customers don't go OTC. Not many.
Well, small family offices do. I mean,
yeah, small ones. But I do think that there was enough demand from big players to buy up the Bitcoin, because they're going to want that collateral if they're going to profit from the short. Okay, because here's the thing: if they're going to be profiting from the short of the futures, and they really want to make their position stick, they would need to be selling the underlying to help drive the price down. And we're probably going to get into that in a little bit later, as far as how can you manipulate the futures. Now, from what I'm hearing, the margin requirement on the long side is only 35%. Is that what you saw?
I've heard 44% to open and 40% to maintain.
That's the CBOE side.
Oh, okay. All right.
I heard the CME is at 35%.
It could be.
Okay. So that's still pretty, but that's still a lot of margin. So let me explain that for our viewers, because they're still a little confused on these things. Because remember, so many people are now experts at trading, and the only experience they have with any broker is like Poloniex or Bittrex, right? But they think they're expert traders, right?
Good
right,
one.
Exactly, right?
Yeah.
Which is the life that I'm dealing with right now. But I don't mind. It's great. I have a huge customer base for helping people learn how to trade. But okay, so let me explain how the margin works, right? So for the CME, let's talk about we already discussed the short position. So when Bitcoin is at 20,000, you will need 500,000 in margin, and you better have some reserve, because every night that margin goes back to break even of 500,000 if the price stays, in that vicinity. So on the long side, if Bitcoin is 20,000, there is 5 Bitcoin in a contract. That's 100,000 notional. That's the financial term for the value of your position, the value of one long future contract in Bitcoin, the notional of 100,000. With 35% margin, you would need to put up $35,000 in your brokerage account. Okay, if the value of one Bitcoin goes up by $100, that means the value of your contract went up by $500. That means you will be credited $500 into your available funds account, and basically, in order to maintain your margin of just over $35,000, like 35,000 and let's say $50 or something, right? So you'll be credited just under $500 into your account. Also means that if Bitcoin loses $100, that means your notional is not 100,000 anymore. It is now $99,500, and you would need 35% of that in your margin. So they would have to take a little bit of money from your account in order to maintain a 35% margin on that. Okay, so you do need more money in your account than the margin requirement if you want to hold on to your position for more than a day, because the moment if it drops on your first day, they will liquidate your contract. So the whole point of these futures is that there is enough liquidity that the moment you can't refill your margin, your contract would immediately get sold on the open market and to another buyer and seller. The problem happens if your contract needs to be liquidated and there's no there's nobody who wants to pick up your side of the contract. So now there is this slippage going on, which is why you have this giant margin cushion, so that while there's slippage, you're still responsible for that. If you blow through your entire margin and you have no more funds in your account, now there is this gap. So either the exchange takes a loss, or the exchange may or may not have the rights to go after your additional income. I'm not really sure how that works, because up to now these futures never had to go that far. Even when oil went up to 150 and then crashed to 35, there was enough liquidity to immediately liquidate people's accounts before they blew through their entire margin. And the margin on oil is only like 2%. It's something ridiculously small. Same thing on the S&P 500, same thing on gold. The margin is like 2%. So a standard oil contract is 1,000 barrels, right? Let's say each barrel is $50. So the notional on this contract, $50 a barrel for 1,000 barrels, is $50,000. During the trading hours, you're only required to have about $2,000, $2,000 to $3,000 in margin. So you're only putting up $2,000 to control $50,000 notional. So 2,000 on 50,000 is about 4%. So your margin is about 4% of the notional of that contract. So just so it makes sense for people, because the moment you fall under your margin and you can't refill it, they easily liquidate it on the open market. Okay, so what are your concerns, Richard, about these futures besides what we already discussed and the comments of Thomas Peterffy, Peterffy, Peterffy. So what are your concerns besides that? What do you think this means for the underlying price of Bitcoin?
I think that everything is in a bubble because they print the cash and they keep printing it, and they're not willing to increase interest rates. So they're cooking everything and they're raising all the prices up. And this has the effect of making the rich richer and the poor poorer, because the poor's assets get multiplied by 10% and the rich's assets get multiplied by 10%. And look at the notational differences. The rich people multiplied a big number, the poor people multiplied a little number. So people, brokers, financiers, bankers, rich folks, everybody, they want return on their investment. They want yield. They want percentage gains. And Bitcoin gives those better than any other product in the world. And being able to get margin on that multiplies those gains, since it's going up more often than it goes down. And being able to choose your risk level by being able to buy down your risk by selling some portion of your portfolio as an income play into the future, right? By, shorting or longing or whatever your strategy is. If you're a miner, I mean, there's a lot of options. You could do options too. I mean, LedgerX does, 50, 100 coins a day of volume, and you could do options. You could sell puts, you can sell calls, you can buy puts, you can buy calls, you can sell futures, you can buy futures. This whole portfolio is going to allow more people to get in, to play with it, and some people are going to get rich, and some people are going to get very poor. And historically, a market like this, that's a bull run that the world's never seen before, all that's happening is people that can't believe in the bubble, they can't believe in the mania, they short it, and they give all their money to the longs that believe in the psychosis. And they keep shorting it, they keep getting destroyed, they keep getting margin called, the shorters keep handing their money to the people that are crazy long in the top. Long in the top, just keeps going up, crazy, right?
Right,
It won't always be that way.
Okay,
Maybe a year or two later it stops. But for now, someone's got to take the shorter's money. Why not you? Why not me?
Right. But again, right, I'm not following your concern here, right? Because I mean, people that listen to guys like Peter Schiff, to all these other gloom and doomers, I mean, the little guy is being convinced to short the stock market for years and years and
Yeah.
years, and they
Don't short
keep
the
giving
stock
their
market.
money to the longs, right?
Yeah.
Um,
Don't short anything. Everything's in a bubble. Seriously. They print the money for free. It's not real money. It's a digital
I
currency with no issuance cap.
right, but
Don't short anything.
and it's funny because I've actually at a conference. I was at a Martin Armstrong conference. I met a guy that had like a big bear on his business cards, and I forgot what he calls himself. But all this guy ever does is short, and he makes a lot of money because he properly shorts things. But that's an exception. I agree with you. That's an
Most
exception,
people
right?
don't
But
survive. I mean, the vast majority of market participants that get wealthy
okay,
are with the
I,
trend.
I know, but I think we're getting way like to like an over macro scale. I was
All
actually
right.
curious what your specific concerns were for Bitcoin related to this.
I don't
But
think
since
there's
you
any.
brought it
I don't
up,
have any concerns
but
whatsoever. I
but
think
since you
it's
brought it
totally
up,
bullish.
I will comment that I mean the Fed is expecting to raise rates about 4 times next year. We'll see if they will. Well, I'm not saying they will. I'm saying,
Yeah.
I'm saying
I'm sure
I
they're
know, I know.
expecting to. Yeah.
I know. The Wall Street expectation is for 4 interest rate raises in 2018. So we'll see if they're going to do it. Okay.
They
Um,
won't.
so
Wall
they will. They
Street
won't.
decides who gets elected. Who gets elected decides what laws get passed. And I know the Fed is supposed to be separate and isolated, but they all go to the same parties and have the same friends. You're not going to see the interest rate raised and screw over all their corporate buddies that prefer to expand their businesses with free loans. It's not going to happen. It's just not going to happen.
Well, sure. Well, but we'll see on that one. So you don't see any damage to the price of Bitcoin here. You see
It's
this
all
is
bullish.
you
I mean,
see.
listen, if you wanted to short Bitcoin, the largest, like if you're on my stream on my side, there's a link, an affiliate link there for an exchange that does the largest volume in the Bitcoin ecosystem. Period. The thickest order book, the most volume, and they sell futures. They've been selling futures for five years.
Are we talking about Bitmax?
Yeah, they've sold
Yeah,
futures for
I
five
have a
years at
I have an
100x.
affiliate. Yeah, I have an affiliate link to them as well in the bottom
Yeah,
of my videos.
yeah.
Yeah, I'm.
So
No,
if you
and I
wanted to
like all.
short it, you could short it for the last 5 years at 100x margin and go to town and have fun and give all your money to the longs. So like this concept that you haven't been able to short Bitcoin is silly. OKCoin has Bitcoin futures, Deribit has Bitcoin futures, BitMEX has Bitcoin futures, and they do 10 to 100 to 1,000x the volume of LedgerX plus CBOE plus most institutional products combined. Like if
No,
you want to short Bitcoin, you can do it right now.
I agree with you. I agree with you. But no respectable hedge fund or no respectable banking operation. I mean, some of them do, but like a lot of them would stay away from it. Like if I was an advisor to a hedge fund,
Mm-hmm.
I would tell them to do this in the CME contracts. Do not put your or client money at an unregulated exchange and in Bitcoin because it can get hacked, right? Now
Mm-hmm.
you can
Yep.
buy the Bitcoin yourself. You can be responsible for your own cold storage for your clients. That's different. And then you can go ahead and trade long or short that the CME futures are here. And that matters to me personally because I have not traded any Bitcoin on any Bitcoin exchange for that specific reason for over a year. But if I can qualify to trade on interactive brokers, and I heard it's not that easy, like regular investors may have need special permission. And in my case, I do all of my trading in my retirement account, and you're not allowed to trade futures in your retirement account. So I'm going to have to get my traditional account up and running again because right now it doesn't have enough money in it to cover the margin on a single CME contract. So I would need to fill that thing with money.
See,
I'm not
let
exactly
me
sure
let
where
me
I'm
give
going
you
to
an
get that money
alternative
because I
idea.
don't have that much fiat.
Yeah. Let me give you an alternative idea. If you're scared about counterparty risk, you can buy down counterparty risk with increased leverage.
I
So
agree.
if you take a 10x leverage position instead of a 1x leverage position, you're going to get liquidated 10 times faster if the market moves against you, but you're also only going to have to risk 10 times less coin on the
I agree.
exchange. So, depending on what type of trader you are, you really can use higher leverage to buy down risk. And I mean, I'm going to give you a weird, like, no one's going to like that I'm saying this, but people are stupid and they lose their keys and they lose their coins And I think for a lot of people, unfortunately, regrettably, for some large portion of people, their coins will be safer on the CME in cash form or safer on BitMEX with their security than with their own security. As stupid as that sounds, as terrible as it is, it's opposite the idea of the whole project, but it's reality, right? A lot of idiots lose their keys and screw up or get hacked or have a gun put to their head. And, if your coins are on BitMEX, they only do withdrawals once a day. So even if someone did put a gun to your head, you couldn't get your coins out, right? Like, it's just interesting that in some cases, if there's not a real certain reason for people to believe that their security is better than some exchanges. Not all exchanges, but don't overestimate how bad people's security is. They lose their keys to malware. They lose their keys to leaving their password next to their computer. They lose their keys to friends. They lose their keys to jaded lovers. So either have amazing security or put your coins on some exchange that you feel they're safe.
Well, right. But the point is, with the CME, there's no coins to put up because they're all cash settled. Now, what is your view on cash settlement of the CME futures versus physical delivery? Because you probably didn't watch a few days ago, like 3 or 4 days ago, I did an interview with an old school futures trader from the 70s who currently trades on BitMEX, loves Bitcoin. His view was that cash settlement is completely terrible and they should have been physical delivery. And I take the other side of that debate. I think it's really good that they're cash settled and not physical delivery, because by not having the CME futures be physical delivery, the CME futures should play very minimal role in Bitcoin's price discovery.
Well, I mean, so this is one of those probabilistic things. If you want futures that settle with delivery, get an account on LedgerX or work with someone that does, because they'll give you physical delivery, and they do 50 coins volume a day. They did 50 coins yesterday. If you want to play cash and have a great counterparty, not saying LedgerX isn't, they might be, they probably are, they're licensed out the yin yang. You're not going to get a better counterparty in this world than CME and their broker network, and like you said, great network infrastructure, this stuff works right, and it has worked right for a long time. I love that. The only downside, the only risk is that someone could try to do something silly, like short it to death, and I believe that they would be destroyed for the same reason that you see a guy named, is it Bill Ackman? The guy that tried to short Herbalife, the Ponzi scheme, that got destroyed?
Yeah, I always get him and the guy he went up against confused.
Yeah.
It was Aikman, and there was another hedge fund guy.
Yeah. If you short a pyramid, if you short a Ponzi scheme, you will get wrecked. If you short anything in this bubble everywhere market, you will get wrecked. So the concept, the idea that some cabal of evil people is going to use cash to naked short the futures product into the ground and hope that people arb it out to lower the spot price or have accumulated enough to lower the spot price themselves, all of that is so complicated and so risky that any person with half a brain cell would just long it and pump it and go with the trend and get richer with less risk. It's a bubble. Let's ride it.
I agree.
Let's ride it.
Carl Icahn was the other guy that tried.
Yeah.
Man, I remember that Herbalife insanity.
It's still going. Still going.
Yeah. I mean, Herbalife is an MLM.
Yeah.
We have MLMs in the Bitcoin mining world, right?
Yeah.
What do you call it? Big Club is an MLM. We can talk about your opinion on them, but I guess the side
MLMs are bad. MLM, okay. In the ideal world, you have production, you have the consumption, you have the minimum amount of rent-seeking middlemen in the way. And MLM is the opposite. There's production, there's consumption, and then there's this maximum possible number of people doing nothing in the middle. It's the most disgusting business model that chews people up and destroys them. 95, 98% of people that join Herbalife lose money. How is that good for the world? And then the people that buy the products pay for overpriced crap.
Oh yeah.
No.
Yeah.
So how is this good for anybody?
Yeah, they're all like that, like Organo Gold in the coffee space, Mary Kay, and
Stupid. It's
yeah,
it's the worst. It's bad for everybody.
yeah, it's pretty bad. Like Amway, though Amway does have like a basketball stadium. I guess there's lots of money to be made if you're at the top. But
You ain't
anyway,
gonna
yeah,
be at the top. It's
yeah,
not gonna happen.
MLMs are terrible. Well, like I'm all for affiliate codes, but those
Yeah.
affiliate codes can't be MLM. Like there's a
Yeah.
big difference there
Yep.
between MLM stuff and just
Yep.
affiliates where we're like an Uber affiliate, right? Like you get $10, they get $10, and that's
Yep.
it. Or like in the crypto space, like a BitMax affiliate, I
Yep.
think instead of BitMax collecting 100% of the commission, they get like 80% and you get
Yep.
20%. I mean,
Yep.
these are very sustainable
Yep.
referral programs, but MLM is completely not sustainable. I'm not
Yep.
even sure how we got on that topic. I guess it was the
Well,
Herbalife incident. No, but
it's the topic is, if how many people are successful shorting things? None. And how many people are successful shorting bubbles? None. But everyone is scared shitless that some magical cabal of people is going to dump on us. When it's so much easier for the longs to squeeze the shorts, it's not even funny. And that's the whole history of
right,
Bitcoin.
right, but yet in gold, it's completely the opposite, right? Everyone is complaining that gold gets like crushed to the downside, and all of the longs constantly get killed.
You can
So
mine more
it's just
gold.
such a weird dynamic.
You can mine more gold. You can't mine more Bitcoin. You can actually go and get more gold out of the ground if you want to. And
Well,
gold
that's
had the
not.
history.
Well, that's not why. That's not why they go down, right? I mean, they go down is because people complain about naked shorting, but you have to realize that in the futures market, even with physical delivery, every short is a naked short. Well, like people don't understand this concept, right? I'm sure you do, Richard. But everyone complains about naked short gold, but the reality is, every time you go short a gold contract, I have shorted gold a bunch of times in the futures contract. I'm naked shorting it every time I do it, right? Because it's legal. It's legal. It's price discovery, and that's the difference. There is a threat of physical delivery. If I short gold, that means I am prepared to deliver the gold, which I obviously don't have, right? Like I don't have 33 ounces of gold for every futures contract I ever shorted, right?
Well, I mean, you could get it if you needed to. I mean, it's,
I could. Thank God for
I think
2%
99% of
margin.
contracts do not accept delivery. So
Well,
it's fine.
right, because these contracts just cancel each other out, right?
Yeah. Well,
And
it's
what's going
you
to
don't. No
happen?
one needs that much. It's all speculative. 90% of
Because
gold's
nobody
value
wants
is
it.
speculative, and Bitcoin's going to take half
Right.
of that. So feel
I,
fine to
I
short
agree.
gold if you want, because it's being suppressed and Bitcoin's taking its value anyway. So keep shorting it.
Well,
Gold's
I
not
don't really
going to
think gold
20K. No worries.
I don't
Short
think
gold,
gold's been
buy
suppressed
Bitcoin
all that
works for
much,
me.
but again, anyway, different discussion. But
Yeah.
my view on it is because there's no threat of physical delivery. I call it a threat of physical delivery. Like when someone shorts, 50,000 gold contracts, right?
Mm-hmm.
There's at least a threat of physical delivery. So someone has to buy them on the other side. It could be a wash trade, it could be a friend at another institution that says, hey, I'll take the other side. I have other ways to hedge it. Maybe I have a put option on the gold ETF that I'll profit from as we drive the price of gold down for a minute. But in any case, there
I
is a
think I
threat.
think I think gold's a special case because it was Bretton Woods and it was the global reserve currency, and it was required to be exchanged physically for Federal Reserve notes. It has a weird history geopolitically, which gives it a special place in the world. And I wouldn't assume any other market in the world would work like gold does because of
Probably,
its history.
probably. Um, okay, well, I'm still waiting for those diamond futures from the CME. Let's see what happens to the price of
Are you
diamonds.
serious?
What?
There's going to be diamond futures? It's stupid. Is that
Well,
real?
why? No, 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 no. I want them to be. There never will be. I mean,
Okay.
the price of diamonds are. I mean, like
It's
what?
it's total bullshit. It's fugazi. They lock up
I
all
mean,
the
only
supply themselves. There's no actual.
right. only men that intend to get married would love to see the price of diamond go to its actual value of about $10. But
The girls have just changed what they wanted, bro. That they want to
say
see
again?
you and hurt. They want to see that you sacrificed. If you didn't sacrifice, it didn't count. If it wasn't irritating for you to listen, then you didn't really listen. You had to endure pain to listen, for them to felt heard. They're checking, they're testing, because if you get them pregnant, you got to stay around, and it's a rough time. So they got to give you rough times on the way to make sure you're the guy that's going to stick around. It's stress testing. It works actually. I mean, there's animals that aren't crappy every month, and it works for them. And the animals that we got, we get a stress test once a month.
Anyway, let me try to get back. Let me try to get us back on track here with the futures. So because of such high margin requirements, and the fact that dumping a bunch of futures does not actually have an effect on the underlying price, because you have to go out and dump the Bitcoin on these exchanges.
The cash and carry,
I think that
the cash and carry ARB guys will lock those prices together. They really will. They're not going to float very far from each other.
I agree. To me, these futures on Bitcoin are going to act more like futures on the S&P 500, where it's kind of impossible for anyone to go and manipulate the price of 500 stocks. If they say someone can't just dump 1,000 S&P futures and try to drive down the price of 500 stocks with that. It just doesn't work that way.
Well, it's also illegal, and they do put people in jail for that shit. So when you...
they don't.
Okay,
actually,
well,
they don't.
I mean, they got the gold guys. They got some gold. They got some LIBOR guys. They got some gold guys in London.
No, not. Yeah, but no, the gold guys that they got was the guys that were manipulating the underlying price because it was like, for example, if the CME decides to quote the wrong price of the Bitcoin as an underlying for a future, they would be in trouble for quoting the wrong price. So the guys that they got for gold were the guys that were actually responsible for quoting the cash price of gold for the futures to settle. But as far as insider trading and trading manipulation, there's absolutely nothing illegal you can do with the futures themselves, nor with the currencies, right? There's no such thing as insider trading the currency market, right? So if you know that President X is going to devalue a certain coin, you cannot get in trouble for insider trading a currency. That only applies to the stock market.
I believe that there's a law that states that when interacting on a regulated exchange, if you try and paint the tape and make orders for the purpose of something that is not actually wanting the thing you're buying, that's illegal. Now, it could be the case that they don't enforce it.
No. That's the case for stocks.
Okay.
As far as I know, that does not apply to currencies, and that does not apply to futures.
Interesting. All right. Something to look into. It seems like an interesting loophole, because there would be a lot of tape painting bots just going through the baby pips, just printing every candle pattern you could think of. I mean,
I'm pretty sure it applies to only specific stocks.
All right. Could be.
Not so much futures, but
they should probably amend that law, because less collusion and less fuckery is a better market, in my opinion. But if they're never going to enforce it anyway, who cares?
Like the real money in insider information is made with options. I mean, if you know some kind of information, you can buy options at like fractions of a penny on the dollar if you know enough information.
Right.
You can go so far out of the money. Like this is why M&A is so big. Like if you know a company's gonna get bought out for 50%, you can go out and buy options for like 5 cents, and all of a sudden, your $1,000 investment is worth millions.
Yep.
Overnight.
Yep.
The real profits are made in the option space, not.
I think these days the real options is just longing a crypto. I like Bitcoin, but it seems like everything's going up, so it doesn't take any work at all.
Okay, so speaking of it going up, I mean, I'm sure you've seen Tether all over the news.
Yeah.
So it looks like you and I fairly agree on these
probably
Bitcoin
not
futures.
And the futures, yes, but on the Tether, I think we're on slightly opposite sides.
Okay, so we're about to explore that, and yeah, I'm not. So you're not scared for these futures coming in. You think it's kind of generally
So
more bullish than bearish for Bitcoin?
on the futures, dude, they're gonna blow this
Yeah,
bubble up so goddamn big. It's in everyone's interest. They'll be able to make
I
they'll be able to make an e-mini contract out of the bitcoins once they get the price high enough. You'll get a Bitcoin mini contract. This is their new toy, dude. How many new commodities get listed per decade? This gold was
maybe
listed 40
maybe
years
five.
ago. Gold was listed 40 years ago. Bitcoin got listed now. This is the new
I
toy,
think,
man.
yeah, I think they
They're gonna
listed uranium recently.
Yeah, they're going to blow this bubble up, dude. Oh, it's going to be so beautiful. It's good. I mean, I undercalled it. People called me crazy when I said 20K before Christmas. They called me crazy. They called me stupid. They called me a lot of things. I think I'm right. I think they were wrong. And Wall
You
Street's
got no no
just getting in.
you got that one right. I mean, I was a little more conservative. Um, you know the funny thing is, Cointelegraph had a big infographic published recently with somehow they have me stating that Bitcoin will be $100,000
Lucky you.
by the end of next year.
Hey,
Now,
you'll win that
I
one.
well, no, by the end of next year.
Yeah, you'll win
They
it.
already have me in print.
We can go to 5x next year. I don't mind it.
Um, they already have me in print. I have no idea where they got that because I never actually said it, right? So it's great. It becomes an awesome win-win because if it doesn't happen, they can't prove that I said it because I never actually said it. But if it happens, I'm like,
Well, here's what you
hey, I
do.
called
Go
it, right?
go make 5 blog posts on 5 blogs at 5 prices, and then just tell people about the one that hit. And
Yeah.
then you look like a genius.
Hey, you know what? You know what? That's actually a lot of. That's how a lot of newsletters do it. It's
Yep.
really really scammy.
I was
I
amazed when I heard about it. I was like, God damn, that's amazing.
Yeah, no. What a lot of bloggers do, right? So I heard this from the past. So what you do is you start like let's say 10 newsletters at once, and and each time it's like a coin flip, and then one of those newsletters is going to be right, you know,
Yep.
10 trades in a row,
Yep.
right?
Yep.
And
There's a
that's the
name for it,
one
but I
you
can't remember
start
it. That
right,
practice?
and that's
It's
the
so
one
cool.
you start publishing and bragging to people. Yeah.
Yep.
It's a really neat trick. All right, so let's talk about Tether. So,
Sure.
what have you heard? I'm sure, like I know I get a lot of rumors coming into my inbox. What's your view on it? What do you think? I haven't heard your public
Sure.
comments about it, and let's see how
I don't
different
think
they are.
anyone has, to tell you the truth. I haven't publicly commented on it, I don't think. So here's my chance.
Perfect.
Um, if you want to have a business in the Bitcoin ecosystem, the biggest two problems you're going to have are getting developers that are good. You'll get a lot of bad ones. And two, getting banking.
Competent development. Yeah.
So in developers, you can make new ones. Banking, it's very, very hard to make your own bank. And so what happens is you try and cheat the system by using credit unions, and then the credit union turns you off because they had problems with their settling bank, or they had problems directly settling with the NACHA Fed system. So if you think it's easy to get a Bitcoin bank account, guess again, it's not. And the reason it's not easy to get a Bitcoin bank account is because the regulatory bodies and the governments are unfairly harsh on the banks themselves. So because the government has crappy laws with excess AML, KYC, SAR, suspicious activity reports, all that stuff, because the government is so harsh there, they lean on the banks, and then the banks don't want to take any risk because they're not making much margin anyway. So if they're not making much margin anyway, why would they want to lose $500,000 to an audit and lose 10 employees to an audit because of one bad client? Not even a bad client, but just a risky client, when they could just not have the risky client, not lose the 500 grand to compliance and attorneys and accounting and audit problems and possible brand harm, right? So banks do not want to touch crypto at all because the government is very hard on them. Now, what's a way to route around that? Beg the government. They don't listen. Okay, what's another way to route around it? Move to New York, let them put their thumb up your butt and abide by a bunch of regulations, but you might get a bank account, and that's a good option. That's at least it exists. It's a good option. Now, what's your other option? Play the offshore game. Okay, well, what's the offshore game? Well, you get a bunch of accounts with a bunch of people in charge of them, And then if one dies, you got another one. And if that one dies, you got another one. And that one dies, you got another one. And so basically it's regulatory arbitrage. This jurisdiction doesn't want to play ball. They don't want to give us bank accounts. They want to complain. They want to delay things and, increase reserves and all that crap. And you're like, fine. Then we'll just do it in a bunch of countries with a bunch of owners. And then whichever one stays up, that's where people send their money. And those are the only options you got. That's it. Those are the only options you have. You cannot get money from your customers any other way. You could try and take PayPal. They'll shut you off. You can try and take Western Union. They'll shut you off. You can try and take MoneyGram. They'll shut you off. You could do credit card fraud and pretend you're a different business. They'll shut you off. You might go to jail. If you want to accept people's money for crypto and you don't have a New York bank account license or own your own bank somewhere, that's what Tether appears to be to me. People trying to stay in business and try and keep this ecosystem going while everyone explains to them that they're the biggest, shittiest company in the world, while explaining to them that they're the biggest, shittiest company in the world, doing absolutely nothing to help anyone deposit anything anywhere, right? So everyone like, that guy on Twitter who posts once every 5 minutes, full-time job, what is he doing to help anyone? What is he doing to help you get your deposit to someplace useful?
Are we talking about Bitfinex or?
Yeah, I just, when I consider people to be more harm than good, I just don't advertise them. So I don't say the name.
No, but I'm not sure if you're talking about someone from the
I'm talking about who you're talking about.
Troll.
I'm talking about who you mentioned just a second ago.
Okay, got it.
If you want me to value your opinion, you got to bring something useful to the table. If you want to talk shit, but not offer any solutions, shut the fuck up. Okay? Nobody wants to deal with these offshore counterparties anyway. And so let me tell you this, right? Tether could collapse, right? But you know what else? They could just decide not to send you your money from a central bank account. What's the difference? You have a counterparty, right? You have a counterparty. You either trust them or you don't. So if Bitfinex had a single bank account, they could just be like, you know what? We're just going to buy crack with us and smoke it. Sorry, guys. And everyone would lose their money. Or they could have 50 bank accounts and invent some blockchain thing called Tether. And then if they wanted to just take your money and smoke crack with it, they could. So like from my perspective, since you're already at the total and complete mercy of the administrators of the system, isn't the blockchain side where you get to see some things and account for some things infinitely better than the black box that is every other company that you deal with? Look around your house and tell me the thing that you got an audited report from the counterparty. Oh, look, Shure Microphone. You know how much money they made last year? I don't know. And they won't tell me if I call them and ask them. And by the way, like people ask for like an audit. So let's say you ran an exchange and you had accounts all over the place and you had, different owners all over the place for redundancy. And someone said, prove to me you're legit. And you go, okay, well, here's the bank accounts, here's the owners, and here's the amounts. And you know what they're going to say? They're going to say, that's not good enough because you might have encumbered those funds. You might have actually entered into other agreements and already loaned that money out or promised that money to other people. So you can't even give these people what the fuck they want because what they want is impossible to give them. It can't be given, right? So it just drives me crazy because go build something better or go advertise people use CME or go advertise people use CBOE or go advertise people use LedgerX or go advertise people use higher margin to reduce counterparty risk or do something that solves the fucking problem. But don't shit talk a company that's doing the best they can. I mean, look, it's just another exchange. Exchanges get hacked. Exchanges get failed. It's not great. But what are your options, right? Your options are other counterparties which suck equally with less oversight, with no blockchain insight at all. So in a world of suck versus suck versus suck, this suck seems reasonable. And if you want better counterparties, they're available to you now for some things. But anyway, if you don't like a company, it ain't because of Tether. Because they could just not use Tether and steal all your money anyway. They do whatever they want. They have the keys, right? That's my take on Tether. The reason I don't want to defend them is because if they blow up, I look like the asshole that defended the thing that blew up. And I don't, Tether doesn't need to blow up for an exchange to screw you. They can just screw you. They don't need Tether to screw you at all.
All right. So, in your opinion, and the answer could be I don't care.
Yeah.
Do you think there is $1 for every Tether sitting in some bank we're assuming is in Taiwan? Do you think
I
yes? Do you
I
think
think that
do you
there's a
think it's
whole
freshly reserved,
shitload
or
of
you really
dollars,
don't care?
and it probably approaches one. I think there's a whole
Hmm.
shitload of dollars, and it probably approaches one. And I would be worried. I would be worried about tethers inflating the price if they were the price leader instead of the price laggard. Their price is lowest or second lowest constantly. So they're not inflating the price with tethers. I know that. And if you remove money from their system, they issue tethers on removal, so you can't even trade it. I mean, if it was tradable, people would be making money on it and not publicizing it. You can't. It's
Well,
not
it is
tradable.
tradable. I heard it was tradable on
It's not.
Kraken. You can go
Sometimes
long
it
or
goes
short
up,
tether
sometimes
on
it
Kraken.
goes down. No. I'm saying if you when you saw tethers were issued, there's a bot that I watch that lets me know every time tethers are issued. Like
Yes.
before I went to the opera, I saw that there was something like 75 or 100 million in tethers issued today. But we don't know. So tethers are usually issued when people are withdrawing money from Bitfinex, not depositing it. Sometimes it's
No,
for
no, no,
deposits.
wait, no, no, no. Oh, you mean they're issued on both? They're probably issued on both
Right.
sides.
And you can't
Um,
trade the damn thing. So you know that the tethers were issued, but you can't trade it unless you do chain analysis and try and figure out which addresses cause which coins to go up, or if they send certain amounts, or if they send certain amounts in series. The damn tethers are not pumping the price on Finex, and they're not tradable when they print. You can't just long Bitcoin every time they get printed. You'll get wiped out. I mean, it's 50-50, right? You might as well just flip a coin and not pay the fees. Uh, so what's left? What's left is, the system could be Fugazi and it's all fake, but it could be all fake without the stupid tethers. They don't need the tethers to be fake. They could have their own central bank account and just be like, we ain't paying
so
nobody.
again, I must have missed your answer to the question. Do you think there is a dollar for every
I do.
tether?
I think
You do.
there's a shitload of dollars and that they get a shitload of wires and they go into people's bank accounts, and if you want your wire, they'll send it out to you. And the minute that you start hearing people complaining that they're not getting their wires, then you can be concerned. But for a company that's making millions of dollars a day,
I
they
think
don't.
I don't think that's true.
Well, where are the complaints, bro? I mean, it's the internet. People complain as a
No, no,
religion.
I don't.
People complain that don't even have a
Okay.
business relationship.
Here's why I don't think that's true, and that's simple, right?
Mm-hmm.
If Bitfinex was making millions of dollars a day,
Mm-hmm.
the $76 million hack would have been, completely paid back
Oh, no.
within 5 months.
You know that the space has changed in the last, like the volumes have all 10x'd in dollar amount because the values of the cryptos are traded have 10x'd. And then the number of people trading them is like 5x'd. So there's like 50x more money in the space as a service provider than there was a year ago. So everyone's profitability went up 50x basically from a 10 times increase in the price and a 5 times increase in users. And I'm probably being conservative. It's probably more than a 5 times increase in users. So everybody that was making like shit ski money a year ago, they're making 50x now unless they had scaling problems. Or they weren't charging based on dollar volume. If they were just charging flat fee, then they wouldn't have gotten wildly more popular. I mean, look, if that exchange failed and if Tether turned out to be 100% bullshit, it's never mattered less because now you've got better counterparties. Coinbase is a good counterparty. They're regulated out the ass. CME and all those brokers are great counterparties and they're regulated out the ass. So if Bitcoin was ever going to be able to withstand some type of bullshittery hack, now's the time. And by the way, BTCE got shut down. Does Bitcoin care?
They're back.
China banned Bitcoin. Yeah, they're back.
NBTC is back.
What I'm saying is, like, every time, like, Ross Ulbricht got arrested, does Bitcoin care? Oh, look, South Korea is going to propose some regulations. South Korea is leading in price today. So I don't care about any of these things. There's too much mania and too many people that want it.
So I do think that issues with Tether will have a bigger ripple through the system than perhaps you do. So again, under your assumption that all
The
of
question is, when's it
money-
going to fail? Maybe it fails 8 years from
nobody
now,
knows.
6 years,
No,
5
nobody
years.
knows.
You can't be out of the market. You got to be long in this thing.
No, I completely agree. I mean, nobody knows when it's going to fail. Like, who knew when Bernie Madoff was going to fail, right?
Yeah.
Like who knew when Mt. Gox was going to fail? Like nobody knows, right? Nobody knows when these things come.
Mm-hmm.
And they usually come at the worst possible time for you personally if you're involved in anything related to that, right?
Yeah. I call it the FUD line. Right
Yeah,
when the price hits
just
the
like-
certain point that makes you happy, the FUD comes out, and then you do your dip.
So my view on it is this, right? If there is all that money back in Tether. I don't understand how Tether is any different than e-gold. And you remember e-gold, right?
Yeah. Right. But now whose side are you on, Mr. Decentralized Crypto Guy? Right? So if you're going to argue that this is a violation of regulation, to some degree, our podcast talking about it is probably a violation of a regulation as well. I mean, arguing that things are against regulations is not a strong argument. Do you know what I'm saying?
No, I'm not arguing. No, I'm not arguing that it's against regulation. I'm arguing that it's
E-gold
very
worked
naive.
really well until they shut that shit down from being
I totally did.
centralized.
Right. Exactly. So to me, this is my problem with Tether. I didn't care about Tether when it was a $10 million problem. Tether, if it's not a billion, it'll be a billion within a month or two. Okay.
Yeah. So they've already rolled out a
to
competitive thing to fail over to if Tether fails. I don't know what it's called, but they rolled one out. And you have the opportunity to, instead of shit talking it, start your own. There's some other altcoin that performs the same function. They've rolled out another coin on their exchange that performs the same function that they could probably fail over to if there was a problem. And since they seem to be so profitable to do, everyone go start your own Tether competitor. Go gather up a bunch of people with bank accounts and launch your own Tether competitor and fight the good fight. And whoever is the most transparent can win. And I'm fine with that. I'm great with that. I mean, look, in an ideal world, we wouldn't have to route around banks sucking so bad. But we don't live in an ideal world, right? So in the world that we got, if everyone's got to play games, this is what games looks like.
Right. No, what my thought on it was that to me, if the money is sitting there, it's another e-gold, and it's not that.
It's just.
I'm not here to be the regulatory police here, right? I'm just saying that it's naive to think that the way Tether is going to end is any different than the way e-gold ended. They're going to show up and they're going to take the underlying, whether that's US dollars or whether that's gold.
Yeah,
and then your
it could happen.
Project goes up.
But what are you going to do? Like you try and route around it the best you can, but like
yeah, exactly, which is why I would not be holding any Tether. So the question becomes, if Tether goes up, what does it do to the crypto markets?
Well, okay, let's see. It's going to hurt shitcoin exchanges because Tether probably buys as many shitcoins as it does Bitcoin, maybe more.
Probably more.
And then I mean, look at I'll give you an example, okay? A lot of people had a lot of millions of dollars on Mt. Gox, and they didn't get their money, and they didn't get their coins. And so I think if Tether were to fail or a large exchange were to fail, then you'd see Bitcoin price go up for the same reasons that it went up when Mt. Gox failed, because the people that are in the know prefer to try and escape the funds, buy Bitcoin, than to just sit on more Bitcoin that goes into bankruptcy.
Right, but then we hit a 16-month bear market.
You might hit that anyway, bro. I mean, this is life. Like, look, as long as we've got new people that want in, Wall Street's not in, everyone's not sold their house yet, everyone's not sold their car yet, we're going up. But once everyone's sold their house, once everyone's sold their car,
I also
we might go down.
I also think that a sudden collapse in Tether would have a short-term huge rise in Bitcoin, because people will be buying Bitcoin at like 10 cents on the dollar to get rid of their Tether, right? Like
what do you want to sit in, coin or Tether? You can buy the coin.
And that would drive the price of it up. In addition, some of the shit coins, you have no more base, everything gets based against Bitcoin.
Yeah.
But yeah, I think a lot of people are watching what's happening with Tether, and they're like, well, we can also launch a coin. We can back it 1-to-1 to the dollar.
There you go. Do it.
But how are the profits made there, right? That's the other thing, right? If it's it can't exactly be 1-to-1.
Probably
right?
fees.
You got to have some kind of fees. So that means that it's not exactly 1-to-1. It depreciates over time.
Yeah.
And the funny thing is, like, I don't understand how people in the crypto space hate the US dollar and hate the Fed, but they seem to like Tether because it's the same thing.
Oh, they're just useful. They're so useful. If you need, if you're trying to perform arbitrage between two exchanges and your options are move Tether and make the ARB money now, or wait for the banks to open and don't make the ARB money, Tether's really useful for arbitraging prices between exchanges. So, if you wanted the real solution to this problem, you have to fix the banking system that we're attached to currently, because that's where everyone's money is currently. So right now, this distributed suckage is the best that we've got to route around bad banking regulations and scared bankers, right? If we didn't have scared bankers, or we had better regulations that caused them to be less scared, we wouldn't need any of this magic, right? Everyone could buy Bitcoin with their credit card, and everyone could, buy Bitcoin with their ACH deposits and just take a picture of your check. But that's not the world we live in. The world we live in is where we have counterparties that treat us as enemies, treat us as scumbags, treat us as criminals for just wanting to do commerce with each other. And, these types of weird, distributed, shady, cloudy things are the only current solution that I can think of to that problem, other than moving to New York and not having New York customers, or like it. You know what it costs to get a license in every state? I think it's like 20 mil.
Crazy.
Like if you want licensed and bonded and insured everywhere, and all the insurance surety bonds you got to put up, I think it's like 20 million just to get started. And then you get to operate at low margins because you're competing with Coinbase that's venture funded and done rounds at 100 mil or more. So your option is either tether or go become Coinbase. We just need to we have to endure the shadiness for a year or 2 or 3, and then we'll have better counterparties everywhere and it won't matter.
Yeah, it's amazing. Like the crypto space is like as shady as.
It's not our fault, bro. It's the existing system's fault, man. I mean, it's the reason we had to start in the first place.
Hey, so I asked my audience to throw some questions at us. Hopefully, my friend Rich is around. So in the meantime, I got about 20 minutes maximum. Anything else you want to talk about? Any topics you want to explore?
Let me think. Futures, bullish, mania, bullish, Lightning Network, super cool. Live transactions.
I got something. Okay. Did you watch the recent Jimmy Song versus Roger Ver debate?
I didn't. Was it any good?
Okay. I heard it was terrible, but I haven't seen it myself. I'm like scared to watch it. You had one with Roger as well, and I've had one with Roger.
Yeah, I saw yours.
I
saw yours.
And I saw yours. I mean, I know Jimmy is disappointed in how he did. He thought he was going to do better.
Rogers.
Where are we going?
Roger's got talking points, and he sticks to them.
Yeah. So I mean, I kind of have an idea where we're going wrong, and I advise everyone not to debate Roger.
Yeah.
But
the time's over.
And right. And the thing is, well, first of all, it's obvious which is the real Bitcoin. But besides that, right? Besides that, my view on these debates is the problem is that when Roger interrupts, he changes the topic.
Yeah.
And it makes you look like a nutcase because you haven't explained the previous topic, and now you're going crazy trying to frantically explain the next one in 2 sentences of something very, very complicated before he changes the topic and screams censorship as you're trying to explain a technical aspect. So my view on it is, if anyone in the future is going to be debating Roger, have a middleman, neutral or not, it doesn't matter, with a finger on the mute button. One person explain the technical aspect of things.
If one person has been saying the same talking points for a few years and has practiced them and sharpened them and seen everyone's counters, he's like the left-handed boxer, right? He's used to fighting righties, but as a righty, you're not used to fighting a lefty. He has the advantage, right? He has home field advantage. So if you allow him to get into his talking points at all, he'll eat up the time with him and you won't win. And the other issue is, like for the same reason I won't mention certain trolls, I just ghost them, depower them. It's not fun to screw with me because I don't respond, I don't react. And they just don't exist to me. That's how you have to treat shitcoiners that want to pump affiliate links. That's how you got to treat everyone that by fighting back, you lose. You got to let them harm you and just eat the harm and don't fight back. So if Roger Ver wants to pretend that his Bitcoin is the real Bitcoin and steal all the hard work and code of the people that he demonizes, right? His project's built on code written through the hard labor and effort of the volunteers that he shit talks all the time about being evil, right? He uses their labor for his own profit while harming the real network while harming the reputations of people that wrote that code, right? So when you install a Bitcoin fake, I'm going to call it Bitcoin fake, right?
I'm calling it Chinese knockoffs now.
When you install that and it runs, large portions of that do run well, they run well because a volunteer wrote it. And to dishonor and disrespect the people that put their hard work into making the binaries download faster, making it not crash, making it verify quicker, making it support HD wallets, all of the progress that we've had from when there was no GUI to when there was, it's disgusting to me. And it's gross and it's perverted. And to not only steal the work, but to steal the name and to use the same addressing format. So I was on Reddit yesterday reading.
That was bad.
There's people that lose money every single day by confusing fake Bitcoin with real Bitcoin.
Yep.
They send it to the wrong address. It's over. All gone. Good luck. So bad. So terrible. And to get into, it's literally, it's Judas. It's used to be on the team, not on the team anymore. Used to be for Bitcoin. Now he's for harming it. Now he's for shit talking it. Now he's for paying to say bad things about it. Oh, that's gross, man. That is gross. Right, and so for a guy that don't need the money.
I've had a couple of questions because there's a lot of new people here. So can we quickly recap, I guess, the top 3 problems with big blocks? And go.
Sure. So right now we've got
name a few. Yeah.
We've got massive miner centralization problems, which make it bad. This system only works when the game theory works. And the game theory only works when people can't collude easily with each other. Otherwise, they could just say, oh, well, we're not mining any blocks unless you include a $100 fee. That doesn't work because some new miner can come in and be like, no, I'll do it, right? So that's the reason that, the system works is because people are always allowed to enter. Well, if a large portion of your miners is one miner, then he can turn people off, turn people on, charge extra fees, or the country that he's in could just decide to turn the project off by flipping a switch. That's all bad. It's all terrible. And so you want to reduce miner centralization. It truly is the enemy of a censorship-resistant project. And one of the ways you reduce it is by making the blocks smaller and easier to work with so more devices can mine them. And it reduces the latency before you can start mining your next block, because every millisecond you wait to get the next block is a millisecond you're at a disadvantage to other people. So there's a natural collusion that occurs where people want to be closer to each other so that they can get access to the next block faster, so they can get an advantage over everyone else that had to wait for it. So they get the next block faster, they can start building on it faster, then they can get it out to the other people faster, and then their little local chain outruns everyone else's chain, and it's bad for the system. So larger blocks lead to centralization, leads to weakness.
Right.
Smaller blocks are better. Furthermore,
right. Let me just echo that. Also, my point during my debates is that with a larger block, first of all, these blocks aren't full on their side, right? Let's say the blocks start to get full. What happens is you have a larger block, I call it block propagation. Once a miner mines a block, it has to move through the entire system for other miners to validate the block. A lot of miners are very, very lazy. They don't even care to validate the block. They immediately start mining for the following block. So the bigger the block, the longer the time it takes to move the block around, the more empty blocks we will have being mined. In addition, a bigger block being moved through the system benefits the biggest miner because he will find the most number of blocks and he already has an advantage on looking for the next block to begin with because he knows what he's found. So bigger blocks literally lead to more miner centralization just from that aspect. In addition, larger blocks create this problem of you running your own node. And a lot of people are very confused on running your own node. Maybe you can help out. I know I have a lot of new followers. So go ahead and start. Just mention the importance of running your own node, and maybe I can add to that afterwards.
So if you don't run your own node, you don't know what rules your money is playing by. If you don't run your own node and someone changes the rules, you could spend your money in a way you didn't understand. to a party that you didn't understand. You might not even be talking to the real network. How do you know, right? But when you run your own node, you know what rules are on there. Am I going to accept 2 meg blocks? Am I going to accept 4 meg blocks? Am I going to signal for SegWit? Am I going to retransmit blocks that have SegWit in it, right? You get to make all those decisions when you run your own node. If you don't run your own node, you're at the mercy of whoever does, right? So if running your own node puts you in charge of the logic by which your money can be spent or by which you can be paid. So it's useful. It also allows people in your area to download blocks from you quickly. It allows you to support the transactions per second and bandwidth that the whole network has to onboard new users, because people have to download these chains from scratch, 160 gigs, right? So it doesn't hurt to run your own node if you can do it, and it helps the network. Just make sure that you open up, I think it's port 8333, so that it can actually talk to the rest of the world.
It's a bit of a. It's not as easy. Like I've set up my own node. It's if you're not technical, get ready to give up a day to do it, but it's worth it.
I mean, if you install Bitcoin Core client, you actually have a full node. You just need to open up the port and go in the options and tell it to talk to the rest of the world. So
right, which on some routers is a little more complicated than on others. At least that was my experience.
Yeah, it can be hard, and it may lock up. The more throughput you put through your crappy home router, the more often you're going to have to reboot it. Sucks a little bit, because the DHCP and the NAT tables and all the little logic that's going on in there fills up and dies, unfortunately.
Well, let me tell you what happened at scaling in San Francisco, right? So Tweedledee and Tweedledum, so we're talking Peter R. and Andrew Stone, get up there on stage and start talking about how great 1 gigabyte blocks are, okay? And I got to ask a question, and at the end, and I made myself look. I mean, I said it straight up. Look, I am right now about a year and a half ago. Or not even, wow, time flies. Last summer, during the whole, 2x debate that we're in the hat, right? Going into August 1st, like around June or something, I went out, I wanted to, run a node. So I went out and bought a $300 laptop from Amazon, something old. It had 350 gigs of storage. That's enough for about 3 years on current Bitcoin. I think it had like 8 gigabytes of RAM, though 4 would probably do it. And, I needed to have, at least Windows 7 on there and a decent processor, even though it was like a 3-year-old computer. I think it was an i3 or an i5. It was enough, right? So I bought this laptop for about $300, and I started running my own node on it. And these guys are up there talking about 1 gigabyte blocks every 10 minutes. So 1 gigabyte block every 10 minutes. So we're talking.
Your hard drive would fill up in 10 minutes.
Exactly. Yeah. So I asked my question, and I tell them, hey, so I'm running my node on a 5-year-old laptop with a 350 gig hard drive for the next few years. What do you expect me to do with a 1 gigabyte block instead of a 1 megabyte block? And they basically laughed and said, well, if you don't have 20, they didn't say it like this, but basically it was the fake Satoshi answer. If you don't have $20,000 to run a node, let somebody else do it. So they're literally looking to centralize the system. So 3 people or 3 corporations control all of your Bitcoin in the future.
Yeah, it's terrible. It's dumb. People always forget that the name of this game is decentralization for the purpose of censorship resistance. And if you forget that game, men with guns will remind you that decentralization makes you less of a target, makes this thing work well. So we need less centralization. We need less mining centralization. We need more competition. We need more geographic distribution, more game theory, incentive distribution. And the more that we have, the safer and more secure this network is. Because bad things can happen, and they almost did with SegWit 2x.
Oh, so, yeah. It would have been bad.
It would have been bad. And we avoided it due to the people taking their own power and refusing to run their code and enforcing code that stopped their code. Thank God.
All right. Hey, so we got about 5 minutes. I got one interesting question. Someone asked, are there any hard forks you're looking forward to, Richard?
I love all the hard forks. I love every friendly hard fork you got. If you want to have the option of doing your experiment on an altcoin that people have to buy, or the existing user base of Bitcoin holders, I prefer the free coins and the existing user base and the fair distribution, hopefully, right?
Have you sold all of your Bcash yet?
I never talk about what I do, but I have written the guide back when Bcash was 0.19 on how to do it, and it's still on my Twitter. So if you want to learn how to dump your Bcash, I wrote the guide on how to do it with a virtual machine that's free, so their malware crap client doesn't steal your keys. I'm just saying, if you downloaded a malware client, I'm sure they're not usually malware.
Have you written one for BGold?
I did not.
Okay.
Probably
Just curious.
should.
Yeah, I've sold all of my Bcash, first chance I had.
Yep.
And but I have not had time to even pull out my BGold. Now that the price is so low, I probably won't even bother.
Well, the magic of dumping your fork coins quickly is that you get more real coin, and then that real coin gets more new fork coins. And so you're creating a bigger snowball that gets bigger and bigger as it rolls down the hill.
That's true.
So if you dumped your Bcash at 0.19, you got 19% extra Bitcoin.
Yeah, no, I dumped mine earlier than that. I got about 10%. I dumped it at about 0.1, which is higher than it is right now. So.
Yeah. I mean, I think that as these forks come out at higher and higher rates, their value.
I don't think they're going to be higher rates. I think they're going to die out.
Man, as long as you can get a ticker on an exchange, people are going to buy it. So I don't care whether you get that ticker.
I keep begging people to pump the BGold so that I can sell it.
Yeah.
All right.
Yeah.
One final question, because I do have to go. And I mean, you have a lot of hair, and my audience loves making fun of my hair. So
shave your head, man. Shave it.
No,
you look good.
I have to get value out of it. I mean, Andreas just got like $2 million.
You ain't getting $2 million, dog. There's only one Andreas.
So how much do you think I should set a pot for that once?
I think you could generate $2,500 to $3,500. I think would be.
No. In Bitcoin, I was thinking like start a collection plate for like maybe 10 Bitcoin, and the moment it hits 10 Bitcoin,
all right.
I shave my head live on camera.
I guess I'd lowball you. I think you could get $3,500 on like a 10-day wait is my guess. But hey, dude, you got a lot of followers.
I don't want to be shaving my head in 10 days. I want this to build like 6 months of anticipation. I want people to get so frustrated with my hair.
Tell them, but you're gonna have to wear the hair the whole time. You're gonna have to keep wearing it.
I know. Like I'm hiding my hair for now. So I was thinking 1 Bitcoin equals $100,000.
I like it.
Or there is 10 Bitcoin in my collection plate, whichever comes first.
All right. Well, hey, you could put 5 in your own plate and buy down, right? Buy yourself some speed.
I don't want to shave my head faster. I'm not in a rush for this. I haven't worked out since the day I started doing video content, like about a year ago. So at this point, if I go to a shaved head, I just gonna look like a cancer patient.
Dude, I'm gonna tell you the truth. I think you look like a Vulcan with the high eyebrows on the edges and the flat hair in the front.
Man, when I had a little more hair, man.
You look like, Vulcans are smart, bro. You're in the right genre and industry for that look, bro. I don't know what I look like. Crypto Liberace, Crypto Dracula. I get that a lot. But someone took the Twitter handle. There's already a Crypto Dracula, unfortunately.
Oh, really?
Yeah. I was going to register it. I'm like, taken. Damn.
Man. All right, man. Hey, Richard.
It was good talking to you, bro.
Thank you so much for coming on. We got to do this again. We'll come up with like with a big list of topics, and maybe we'll like knock them out over another show. Any end statements?
Let's go 20K. Let's go 25K. Long it. Take a little margin. Look, if you're willing to hold Bitcoin because you think it's going up, not down, take half X margin, right? The price would have to go down threefold to wipe you out. But if it goes up, you get 50% more money. I like being long Bitcoin. I think being long Bitcoin at low leverage is beautiful. I think it's free
I
money in a
agree.
bull
No,
market.
no, yeah. All right. Well, thank
Tone's
you
got an
very
affiliate
much.
link. I've got an affiliate link.
Yep.
Long Bitcoin, get rich. That's it, man.
Well, thank you very much for tuning in, guys. I will be bringing on more on the record series, which is where I do a fireside chat with people. I was thinking of what to do in like a crypto scam on futures, but in this case, this would have been a terrible title for it. These are better. I will try to find that guest to talk about the all of the Ethereum problems in the next crypto scam episode, probably from Colombia. I will be off to Colombia on Saturday. Maybe I'll find some time there. If there's a good internet connection, I'll try to get out some more content. And tune in every morning where me and Jimmy Song talk about the price of Bitcoin and the latest news. I'm looking at the price of Bitcoin now. Nothing has changed from this morning. Go check out that video, and we'll see. Maybe there is another pump coming soon. And on this note, I will see you all next time.
Good talking to you, man. Later.